Hello to all traders and welcome back to another market review brought to you by Orbex. So it seems like Wall Street or the markets in general kind of ignored Moody's downgrade on Friday after the Dow, the S&P and the Nasdaq also had a winning day yesterday and continued their winning run actually from the sell-off that we saw at the beginning of April. So not too much of a deterioration in the market. Obviously a downgrade is not a good thing for anything, especially with yields spiking very high as well. But, you know, coming off the back of it, you could say that the market or Wall Street was pretty much unscathed yesterday. As you can see here, from the March to April sell-off that we saw and the price action, we're now slightly recovering back to the previous highs, just trying to get back to this previous resistance area around 45,000. So just trading below 43,000, a couple more thousand points to go. But as you can see here, yesterday's bullish candlestick, as you can see, has pretty much, as I said, ignored Moody's potential sell-off in the market. And the only problem now is we are going a little bit too overbought on the RSI, which could lead to a bearish divergence. But if we look onto the 4-hour chart, we're just seeing now price action slowly still creeping to the upside. As you can see here, wave after wave of upside potential. We're just now seeing where we're going to see more and more of a progression in the market. As I said, very good bullish run. On Friday when we closed the markets, we were expecting the weekend gap to really have more of a push to the downside, especially for the magnificent 7 stocks, you know, Apple, Amazon, etc., really probably pressing lower, but they've finished higher as well. So we can't really look too much of a bad result for the market in general. So where do we go next? Well, as I said before, we are trying to recover back to 45,000. So that's the impetus. We're just going to wait and see if we do see more of a correction or if price action can really move to that particular trading zone, which, to be honest, it is going in that direction as we speak. So there's no reason for it not to continue unless we get a really big maneuver in the market to see what's going to happen. As I said, the only concern is that the RSI and a few other stochastics are very overbought at the moment, so we could see a slide down in price action, but obviously we'll wait and see if that does happen. S&P as well, very bullish. Nice move yesterday, really shaking off Moody's downgrade, and as you can see here, finished on a winning run, and we are starting today's prices with the same kind of sentiment as well, moving away from that massive sell-off. And as you can see here, nice V-shaped recovery starting to take place here. Just waiting to see if we can add a few more 100 points to this particular indice before we start moving a bit higher. But let's just take a look a little bit more intraday, because now prices, as I said, are looking a little bit like the Dow and the Nasdaq, really starting to see more of a flourish of a development in price action. So where can we go from here? What's the feeling looking like going forward? Obviously, President Trump is trying to push more money into America. So this is probably what's more concerning for the American economy at the moment, to avoid a recession. Obviously, Russia and American peace talks didn't really break down yesterday, but they didn't really progress either. So this is another reason why we could see more of a slight move on gold, which we'll report out in the rest of the week, and a little bit more of a downturn on the dollar. So that could affect indices as well. We'll have to wait and see. But as always, we'll bring you all the latest in the fundamentals and technicals as they come on our YouTube and Telegram channel. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.